Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable where we talk about current market conditions and answer any questions you might have about your subscription. We'll talk about Tesla, Nvidia, Microsoft, what to expect into the end of the year, what are the expectations into the next year. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into a trading plan, let's go over current market conditions and see if we want to kind of make a decision what to expect into the next year and end of this year. So I think Goldman just came out. They're projecting 10%. Market is going to be 10% higher next year, right? So we'll, move another 10% higher on soft landing, lower interest rates, and pro growth new administration. Right? So let's look at 10-year yield. Right, let's look at weekly charts. So we can see that the weekly data is continued to 2023, 2024, still pattern of lower highs, lower lows. Looks like 450 held. We're back to 420 on the 10-year yield. Dollar looks to, again, multi-year high, 108. We haven't been at that level since 2022. Did pull back. High yield continues to rebound from the 2022 lows. Right? We're close to year-to-date highs in junk bonds. Value stocks continue to rally. Right, you're going to have this vertical move since the end of 23. Since October of 23, we're continue to outperform the QQQ. At least this year. Semiconductors been underperforming. You can see kind of a pausing. The rally is paused, and we're still pretty far away from the all-time highs that we posted in June, July. Small caps rebounded and basically posted a new record high since 2021. Right, the highs were in 2021, marginal new highs on small caps. Mid caps are actually new highs. Right? WR mid caps broke out and significant rally and breaking out. So you do have a broadening of the participation in the rally in mid caps. Bitcoin is a nice round number, 100,000. Right, that's the psychological level. Crude oil, kind of still since the start of the recession, it's been underperforming. Was lack of demand, smaller demand from China, smaller demand from Europe. They're still struggling with growing their economies, and we are at basically multi-year lows when it comes to crude oil, which is positive for the market, right? Lower oil prices are also good for consumer discretionary. All right, so let's just talk about the end of the year first. So end of the year, we're at 601.72. We're posting marginal new highs again in spiders. Posting marginal new highs in spiders. Let's see let's go back to gamma exposure. Let's look at spiders. And let's just zoom into the December expiration. So we're looking at the supply and demand for option contracts, for options data going into Christmas, right? Third Friday. So one standard deviation move, we break through the 600 level. We're at 6183, and the biggest position right now is 615. So a lot of people are selling since 615 calls. So on one hand, we're at 615. If everything is positive, unemployment data is next Monday. Then we have Fed decision in terms of interest rates, and then that's pretty much it. So that's on the positive side, 615. On the negative side, 585, which is a 50-day moving average. Those are the two extremes. So let's go over that first. Let's zoom out 1 day. So 585, right? We basically retest 50-day moving average again in December. That's one extreme, right? Minus 15 points to the downside, which would be one standard deviation move. And to the upside, one standard deviation move would be plus 15 points. 615. All right, so which event do you think is going to happen? Are we going to get closer to the 615 level, right? That's scenario number one. Scenario number two, we're going to get closer to 585 level in the next few weeks. Right, we have the month of December. How many of you say, no, Vlad, we're going higher? We're breaking out above 600. 6178, unemployment is fine. Powell is not going to say anything different. Higher highs, higher lows. We're at 615. So type in 1 if you think we're going to get close to 615 by the end of the year as a first event, or no, we're first going to get to 585 because Powell is not going to cut interest rates. He's going to sound hawkish and higher tariffs, and unemployment is going to tick up. 1, Andre. Thank you. BJ, welcome back. Daryl, Don, Hardif, T, TBCRN, Vitus. All right, how many of you say 1, we're heading higher? How many of you say 2, we're heading lower? BJ, welcome back. All right, Don, 1, BJ, 1. Andre, 2, TBCCRN, 2. All right. Okay, we're 50-50. I'm going to go with the crowd. I'm going to go with 1. I'm going to go with the 1. Again, I think from seasonality point of view, I think 1 is more likely scenario. Nobody's going to provide any new information in terms of tariffs or soft landing versus hard landing. Goldman just came out, they said 10% higher next year. So 71% correlation usually. Even though model does see markets are overbought, so markets are overbought, but they've been overbought for quite some time now. But usually November, December, you do have a strong move to the upside, and we have 71% correlation, which is pretty high. So even though markets overbought, I still think the path of least resistance is higher highs and higher lows. Even if we have a pullback, I think it's going to be short-lived. Right, and bulls will step in and buy the stock, especially if Nvidia turns around, right? Especially if Nvidia turns around from these oversold levels. So that's my take on the market. Next year, let's do the same thing next year. What does the model say? All right, let's do December 2025. December 2025. December 19, 2025. So 670, they said 10% rally, 10% rally. Okay, so that matches Goldman. They're probably looking at the gamma exposures too. Okay, so based on the supply and demand for the December contracts that expire next January, not a lot of exposure, right? Net gamma is 4 million. So this is just based on distribution of possible outcomes. Based on distribution of possible outcomes, we're at 660. Right, 670, another 10% rally from this point. You already see it, people are buying 700. How much gamma is there? December 2020. Yeah, it's very small. Right now in December, there are 4 billion. This is only roughly 400 million, 350 million of net gamma exposure. So this is just possible distribution of outcomes. But we'll go with that, right? So if you believe we are in soft landing, right? If you think we're going to be in soft landing, rates going to continue to go down. people are going to invest more on artificial intelligence, unemployment is going to be steady and soft landing, then it's reasonable to assume, well, some people say 700. I mean, there are some 750, but still, this is too far out. But that's what Goldman Sachs thinks. So how many of you think we're going to be at least 10% higher, or on average 10% higher between now and next December, right? That's scenario number one. Scenario number two, one standard deviation will be around 540. Let's use this number. I think it's 530. You have a large gamma here, not large, but 530. So scenario number two. So one, we're gonna be 10% higher from here, and net up another 10% next year, or no, we're gonna be down 10% next year, and it's gonna be a bearish year. So how many of you say 670, 660? So now this is into the end of next year. Dan, BJ, Andrei, TBC, Sierra. I mean, obviously much harder to project. I mean, these predictions, well, Goldman has been right since 2022, so their projection actually worked. Dan, one. Anybody else? BJ, Andrei, TBC, and Renata. You have more people. T. All right, so twos. Okay, so people a little bit more bearish. People are more bearish. I mean, I do think we're going to have 10 to 15% correction. I mean, I think every year we're going to have 10 to 15% corrections. I mean, market is overbought. There's uncertainty about the administration, the tariffs. Looks like unemployment is getting. The employment market is cooling off, and we probably will have uptick in unemployment numbers next year. So it is reasonable to assume 10 to 15% correction next year, but I would go with one. Even though we're going to have 10 to 15% correction, we will go. I'm going to go with one, that we will be up at least 10% sometime in the next 6 to 12 months. Main reason is that if you look at the model, we're still in an uptrend, even though the uptrend is deteriorating, right? The next 6 months uptrend is deteriorating. Well, model predicted 583 without knowing the elections, right? This is data updated only once a month. But it still sees that even in April, we could get to 615, 630 level. And I think momentum is accelerating now that we reach 600 level before the end of because of the elections. So I think the uptrend, we're still in strong uptrend, not strong, but we're still in uptrend. The momentum is deteriorating. And I would say 508 or 500 is kind of the line in the sand in terms of uptrend versus downtrend, right? So right now, let's see, where did we go? Here, right? So we briefly broke through this level back in July, August of this year. But as long as this uptrend remains and we don't break it, right, somewhere between 513 and 500, we're in the bull market. Obviously, 520, this is 10 to 15% pullback, so we could have 10 to 15% pullback. But as long as we're above 500, it's still a pattern of higher highs and higher lows, and I would be a buyer. If we break through the 500, right, which we didn't do it in April nor July, right, the 500 level held. So I think that's kind of the important psychological level and technical level. If we break through the 500, then the bull market is kind of on pause. I mean, you also have this 480, which is back to February of 22. So these are very important levels, right? If the bulls can hold 480, 500, 511, then it's still pattern of higher highs and higher lows. If we drop below 480, then that means that the bull market is either on pause, or this is the end of the bull market and we are now probably in some kind of recession. Since the core case is no recession next year and we're still in soft landing, I think we will not reach 500. I think 10 to 15% correction makes sense. Maybe 520, maybe 510, right? At least last lows were in August, lows were 510. So I think 510 will hold. So for that reason, it's very important to position yourself that if in the next 6 months you do have 10 to 15% pullback, personally, I would be a buyer into these pullbacks. Right? It's hard to predict what would be the catalyst, right? It could be macroeconomic conditions, could be tariffs. Probably going to be tariffs, right? 2016 was pretty volatile because this was all about tariffs, and one day tariffs are going up and market is down. So we had pullbacks in 2016 after the election, right? When is the election? November. What are some of these pullbacks? 4%. We didn't really have 4% 2016 here. And this is 5%. Not until February of 2018. And this is again interest rates. So December 2018, we have a sharp pullback. But for 2 years, we didn't have many pullbacks. Again, this is just, 2016 is a lot different than 2024, right? Especially in, interest rates and inflation is completely at different levels. But, but I still think that, the next year or two, it's pattern of higher highs, higher lows. And as long as employment is healthy and soft landing, then the market is going to continue going higher. The unknowns are obviously interest rates, right? If we do have tariffs, if tariffs are getting higher and we jump above 4.5 level on interest rates, I think that would be a signal in the market that this bull market is going to be in jeopardy. Because I didn't even think we're going to get to 4.5. So if we jump to above 4.5, I don't know, 470, 5%, that would be a signal that inflation is back because of the tariffs or because of whatever the reason is. So as long as we're staying above 3.5, somewhere between 3.5 and 4.5, I think it's a pattern of higher highs, higher lows. If we suddenly drop to 3% very sharply, then again something is either a recession or unemployment rate is rising quickly. But those would be the risks to this rally, right? Either inflation comes back or signs that we don't have a soft landing, but we have some kind of a signs of recession, which is not the case scenario for most analysts. So I'm gonna stick with the idea that we're gonna go higher highs, higher lows. Any question? All right, so at Tradespoon, we have different models to help you kind of navigate market conditions, right? We have stock forecast toolbox I went over. You can look at the next 10 days, you can look at the next 6 months, kind of give you an idea of where the market is heading. We do have seasonality, so we went over the seasonality chart. And what I trade in a live trading room is these signals: active trader, weekly trader, and monthly trader. So active trader gets published every day. Every day active trader is published. Every week we have weekly trader and monthly trader published, right? So for today, it basically says, okay, American airline, right? If you don't have exposure to transportation, if you don't have exposure to industrials, then maybe American airline is something you want to consider, at least as a short-term trade, right? It could be day trading, or it could be, couple hours, couple days kind of trade. But you can see American airline still in downtrend from 2023, but in strong uptrend, at least since August. So it's close to year to date. I mean, it's flat for the year. It's flat for the year, but nice catch up since the August. So basically saying it's overdone, and maybe, you know, there's more room to the upside short term. Consider buying at 452 or 462, right? If it reaches 452 or 462, let's see what it will start today. Let's zoom out 15 minutes. So usually I wait 15 minutes. Keep in mind today is a half a day. So where do we open? Here, right? So you wait 15 minutes, right? So that's 1461, it reached your level. Then you consider buying, right? Right now it's at 1460. Right, so you kind of can see the bottom, and if you're doing a day trading, you want to, you know, maybe see if it gets back to 1473, right? 1% move to the upside, then you can trim your position. If it drops 1%, then you can consider buying, you know, second half of the position, and then if it drops to 1%, then you're out, right? So those are the how you can trade short term. If you do longer term trade, maybe you look for 2% gain, 2% stop loss, right? Based on underlying beta and support and resistance levels. So that's active trader. You can also, if you want to leverage your portfolio, right? If you're looking for leverage, you can always do the same trade with options, right? If you have weekly options, so then you can buy 14 call, and then you're risking 50 cents. Instead of risking $14.50, you're risking 50 cents. But you have to be right by the end of the day, basically. By, you know, in the next couple hours, it has to rally. So if you're not comfortable with that, then maybe you look at the next week or you look at the monthly expiration, right? Just depends on your style of trading, right? If you're not sure which week to pick, if you're not sure which strike to pick, if you're not sure what if it never reached 1452, right? Right, today's 1455 is low. What do I do if it's gapped up and it's 1455, never got to 1452? Then I encourage you to participate in live trading room. We do have live trading room, elite trading circle. Every day we have opening bell, closing bell. You can participate live, ask questions, and see how I trade, right? I haven't traded today, but last 7 days, I trimmed Amazon position. So I tried to do combination of both stock and options. So I did trimmed Amazon position, trimmed Royal Caribbean this week, trimmed American Express, did Zoom put spread, call spread, butterflies, did XLF call spread. So you have example of both stock and option trades, some of them around earnings, some of them around our models, right? That basically gives you combination of both stock and option trades. And you can see these trades live. You can enter your phone number and get SMS messages, or you can participate live and ask questions, right? So this is a great way to learn. We have great community. We have people who traded for a few weeks, and we have people that traded for a few decades. So you get experience and exposure to different questions. And I think this is a great way to learn and build confidence in yourself as a trader. And I always emphasize trading journal, trading plan in a live trading room, which is important. So I encourage you to participate, ask questions. We do have a lot of free content. You can find free content under Learning Center if you want to know different trading plans, short-term trading plan, long-term trading plan, like kind of a template, how to use stock forecast toolbox, how to use probability calculator, seasonal chart. You have different guides here. And we have a lot of different training for whether it's technical analysis, or you want to learn about options basics, or you want to see 1-hour webinars on technical analysis or option basics. All of that is available on the website as well. Any questions? So in terms of, you know, I think last webinar, somebody, I think Fred asked, Fred here? Fred, probably not. Yeah, he's not here. Okay. But what are some of the ideas for next year, like best ideas? I think interest, you know, a lot of the theme for this year, yield curve normalization, right? The 30-year is higher than 10, 10 higher than 5. You know, at some point we want 5 to be higher than 2, but yield curve normalization. and rotation into the value stocks. And I think that theme will continue. Right? So I think that the banks are going to continue to do well. So, you know, your Morgan Stanley, your Goldman Sachs, some of the credit cards, right? Like Visa is in strong uptrend. So strong consumer discretionary, people have jobs, people spending money, they're buying gifts. RCL is one of the positions, right, we talked about. So credit cards, American Express. So strong consumer discretionary financials, I think that's a strong theme. This year probably will continue into the next year. You know, Wells Fargo, right, your major banks. I think part of the new administration, at least last time, same thing, small caps, mid caps, I think gonna also, so you have a broadening of market rally and market participation. So your small caps, your mid caps are also a good place to invest, I think, next year, some of the themes. What else worked this year? I mean, transportation, right? We have a transportation sector going higher. I mean, Bitcoin has been a good proxy for risk taking, right? I talked about that all the time. You know, it sold off in 2022. It led the rally in 23, 24. So I think this is going to be a year of Bitcoin. I don't know about 200,000 or 250,000. It just depends on some of the policies. But, you know, I think Bitcoin is definitely the theme for the next year is, you know, whether it's ARK innovation, right, or Bitcoin, it's a risk on trades, right? Risk on. You have an uptick in the IPOs, activity in IPO, and I think those trends will continue. So those are, I think, some of the themes for the next year. Consumer staples, you know, they're also been a strong uptrend. They did pull back significantly, but now they're rebounding. Utilities, kind of the same pattern. They had a strong uptrend, pull back, rebounded, and now actually making new highs. So I think some of the defensive sectors are also on a pullback, makes sense to buy. Technology, tough call. It's been underperforming as of late for the past few months, at least. I think without QQQ, markets cannot go higher just on value stocks. So I think QQQ will catch up, right? Whether one will outperform the other one we'll see. But I think, you know, mega cap stocks will finally catch up. Right? Microsoft is oversold. I think this is maybe a time to start thinking about some of these stocks that have been underperforming. Right? Whether it's Microsoft, whether it's Tesla. Right, whether it's NVIDIA, I think they all can continue going higher, and they will continue going higher if we're going to have a continuation of the bull market. All right, any other questions? Palantir. I mean, Palantir has been a strong stocks, right? They're kind of riding the AI wave. They've been, you know, for the past, I think, 3 or 4 quarters, actually positive earnings. Obviously, it's, you know, P of 330, right? So all it takes is kind of elevate it up, and when you have multiple of 300, you just need one bad news, right? Whether CEO is quitting or, you know, like NVIDIA, they don't meet the earnings expectations. So far it's been, you know, one-way trades in 2024, right? It just continues to go higher after each earnings because the demand is strong. So as long as the demand is strong, what is NVIDIA earnings multiple? And this is backwards, I think, look. Price to earnings, 59, 53, right? So NVIDIA at 53, trailing 12 months. You know, is 6 times cheaper than Palantir. So Palantir, you have to be careful. You have to be careful. I would use a very small exposure because it is overbought, and it just requires one bad news, right? You have one bad news, and it's going to have a sharp pullback. Like, you know, SMCI was one of the examples this year, right? Accounting issues or some other issues, and you have kind of a sharp pullback, right? You go from 120 to 20. Right. I'm not saying that's what's going to happen to Pelletier, but I am saying that it's extremely overbought, and you're just one bad news away from sharp pullback. So you can either buy options, right? Or you can, if you buy stock, maybe you buy put, you hedge your position. Right? Pelletier is not that expensive. Let's see. In terms of strike price, what is it trading at? Right? It's not an $800 stock. It's getting there, $70 stock. But if you buy, let's say, even 50 shares, like $3,000, I would buy a put spread. Right? I would buy a put spread. Or just buy a call spread if you think it's going to continue going higher. But we can look at, this is what I think. Let's see what other people think. Let's do 12/20, January 17. Let's do first quarter. I mean, there's high demand. One standard deviation is 75. You do have a 70 strike pretty well. Demand for 70 strike. Demand for 75 strikes. Demand for 80 strike. 4 million, 6 million, 7 million net gamma. Not huge, but you see that this is what people are doing. They're buying 70 calls. They're buying 80 calls, 75, with the idea that it's just going to continue going higher. Usually, it's the biggest moves are around the earnings, right, on Pelletier. Right, every time there's earnings, 23% up, 10% up, 30% up. You have negative earnings, you're down. So if you're talking about short-term trading, then obviously you have to manage your position. If you're holding through the earnings, you have to expect very large moves. Average move is 20% in Pelletier. BJ, Latin America, Brazil, a lot of it is, again, the tariffs, right? You're going to have the tariff conversations. Strong dollar, right? Strong dollar is not good for foreign countries. So if dollar is going to continue to be strong, then it's going to be negatively impacted on Latin countries. If it pulls back, if interest rates pull back, then I think it will be good. What's Brazil ETF? EWZ. Let's see. That does not look like a good chart. It's basically trades as if it's in recession, right? We're at 2022 lows. I don't follow the politics, or I don't follow their economy, but I know there are elections and some of the corruptions. I'm not I would not classify myself as a specialist in Brazil or Latin America. But the chart looks pretty poor, right? It's oversold. I mean, you can say, listen, this is, I have a well-defined stop level. If it drops below 25, I'm out, with the hope that it's gonna rebound. I don't know if there's special elections coming out in Brazil or what the new government, but so far, obviously, it's not doing very well. Mexico. Where's the Mexico ETF? EWW. No, it doesn't look much better than Brazil. Right? New administration, more hawkish, more tariffs, new government, very social. More socialist government, not very pro-business. So that also doesn't look good. That doesn't look good. I mean, they need big changes, right? And this is some kind of a geopolitical changes, like in Argentina, where they come out and say, listen, we're gonna turn around the, is there Argentina ETF? I haven't heard Argentina. Argentina Tango. Okay, not Tango. Argentina ETF. ARGT. Okay, I should have thought about that. Let's see. Was he able to turn around the economy? I think he did. So Argentina should be bullish, right? Let's see. ARGT. Oh yeah. So MSCI Argentina. Right. So you have political change, pro growth, pro small governments, and obviously Argentina is doing well. TBC opinion low, like lows, the stock LOW. I mean, retail has been strong. You do have a breakout above 262. Like earnings were uneventful last earnings, along with Home Depot, but the chart is bullish. All-time high broke through the 260. As long as it's trading above 260, this is a very bullish price pattern for lows. Assuming we're talking about this home improvement chain. Yes, thanks. Yeah, and they have been on this, bullish signals as of late on Lowe's and Home Depot actually. Home Depot is also the same price pattern. So for now, these breakouts are confirmed. Retail is growing, bullish, So I think Home Depot lows do look strong to me, and you have a clean breakout. All right, it's 10:10. That's all I have for today. Again, happy Thanksgiving. I'm very thankful that you guys are part of Tradespoon Yellow Tunnel community. You attend these webinars. That means a lot to me, especially on a shorter week. Markets will be closed in the next 2 hours, and I will see you guys on Monday. Thank you very much.